Welcome back. I'm Pratap here. Today is 26th May 2024. In this video, let us evaluate the performance of NIFTY 50 with the help of NeoStock software supply demand zone chain. So now let's get into monthly time frame. In the monthly time frame, at present NIFTY is having a monthly demand zone. A leg in on August 23 and a leg out is on 1st December 2023. So let us draw the monthly demand zone here. So let me change the color to monthly color. And also let me mark the text with the monthly demand zone. Okay. So this monthly demand zone is having monthly EMA confluence. We are also seeing a price overextension from the monthly time frame. At present, we have a rally candle and 1, 2, 3, 4, 5 base candles are formed. So June month is going to be very interesting. May month we have another few more days to complete, another week to complete this monthly candle. And at present, the monthly trend is also uptrend. Market is at all-time high. Now let's move on to the weekly time frame. And we have an immediately available weekly demand zone which is already tested 2 times, one rejection from this zone, 2 times the weekly candles are closed inside this zone. And also the weekly trend is also uptrend. So when this zone is created on 11 March 2024, after that one base candle. Let us draw the monthly zone. 11th March, this is the one. We have a drop base rally. So this is the weekly zone. And this weekly zone is also having weekly EMA confluence. Recently price over extension is completed. And now the new price over extension is started. Because from this weekly EMA, prices were started moving up. Now NIFTY is at all-time high. And let me change the, let me give the name weekly demand zone. Now let's move on to the daily time frame. Here we have a rally base, rally daily zone is there, but let us generate with the help of supply demand zone. I am changing the time frame to daily and generating the supply demand zone chain and daily time frame. Okay, now daily zone is generated and this is a high liquidity demand zone, daily demand zone. The 21/5/2024 is the leg-in. This is the candle, this is the leg-in, we have a base candle, we have a rally candle, and more importantly, this is having daily EMA confluence. See here, it is having a daily EMA confluence, this zone. All these are all positive factors. Let me give some light color. Okay, this is a daily high liquidity demand zone. Okay, we have drawn the daily zone. At present, the daily trend is uptrend because the market is at all-time high. If this daily demand zone is violated, then only trend will be changed to sideways. But it is a high liquidity zone, and if it is having a fine-tuned 5-minute zone, definitely it will give a very good trade. In case if it is violated, what would be the next daily zone? This is the question might arise. The third one, already tested 2 times. When it was created on 12th February 2024, after that one base candle, 12th February. This is the one. This zone is very important. Even though it is not a high liquidity zone, it is a very powerful high liquidity zone because recently we developed a strategy, a new strategy. So this daily zone is the origin behind the creation of this weekly demand zone. The lower time frame demand zone, which is responsible for the creation of the higher time frame demand zone, is having high liquidity. We are not calling this as a high liquidity, but definitely this zone is having high liquidity, because still we are doing a lot of testing on this zone because it is a new strategy. But so far this is a successful strategy. So this is a daily demand zone which is responsible for the creation of weekly demand zone. See, weekly demand zone picked up the orders from this zone and a weekly demand zone is created. Next time prices came and once again picked up the orders near this daily demand zone, moved up, once again it came, again picked up the orders near this daily demand zone, again moved up and gave a new all-time high. By considering all these factors, this daily demand zone is an excellent daily demand zone. So these are the two daily demand zones we are drawing. Now let's move on to the next time frame, 125 minutes time frame. Let us check any high liquidity zones are there at 125 minutes time frame. So here also I am changing the time frame to 125 minutes and let us generate the supply demand zone chain. Okay, here you have a high liquidity 125 minutes demand zone is there, and when it was created on 21.5, 915, 5 base candles. 21.5, 915. This is the one rally, 1, 2, 3, 4, 5. That means this entire daily high liquidity demand zone is also 125 minutes high liquidity demand zone, the same area. So that's why we need not to draw again. I just add the text. The same thing is also 125 minutes high liquidity demand zone. Okay. And no supply zone because it is a not yet created, it's a all-time high demand zone. Now 125 minutes trend is also uptrend because all the time frames are uptrend because the market is at all-time high. Now I am changing the time frame to 75 minutes time frame. Let me generate the chain. Meanwhile here also let us change the time frame. Here we have a rally, base rally is there. We have a 23rd 5 915, one base candle is also high liquidity demand zone, 75 minutes demand zone, and also 75 minutes trend is uptrend. 23rd 5 915, this is the candle. A little above high liquidity daily demand zone, we have a 75 minutes high liquidity demand zone. If this 75 minutes high liquidity demand zone is violated, then only 75 minutes trend will be changed to sideways. Time being, let us limit our analysis up to this area because a lot of high liquidity zones are here. Now what I do, I will generate the next report, that is the 25 minutes time frame. I am generating the supply demand zone chain. Here also I am changing the time frame to 25 minutes time frame. Okay, here you have a newly created high liquidity demand zone. This is on 23rd 5 1121 base candle. Twenty-third 5 1120. So here we have a zone confluence. This is considered as a lagging candle, base candle, rally candle. This is also 75 minutes. This is 75 minutes high liquidity demand zone, and this is a 25 minutes high liquidity demand zone. This is having confluence with 75 minutes time frame. And now we will change our time frame to 15 minutes time frame. I am going back and changing the time frame to 15 minutes, and let me generate the chain. Here also I am changing the time frame to 15 minutes. Okay, now 15 minutes chain is generated. Here you have one high liquidity zone. Below is there, but it is pierced one. So we have to focus on the third one. It is a fresh zone, high liquidity demand zone created on 23rd, 11:45, one base candle. One base candle. So thus within the same 25 minutes time frame, we have a 15 minute zone. In case if I delete 25 minute zone, the structure looks like this. 75, just above 25. But anyway, I mean 15 minutes, just above 15 minutes. Anyway, let me add the 25 minutes as well. Okay, now we have drawn the zones up to 25 minutes, 15 minutes, but 15 minutes, any more available? Below 6th, we have at 16:5, 13:15, 4 base candles. 16:5. The next one is 16:5, 13:15. So it's far below. Thirteen, 15. One, two, three, four. This is the one. This is also a 15 minutes high liquidity demand zone. It's far below the current, the recently available 15 minutes high liquidity demand zone. If prices has to reach into this 15 minutes high liquidity demand zone, the daily zone has to be violated. Sorry, here some mistake, 125 minutes. Okay. So now the last time frame, let us get into that. That is 5 minutes time frame. See here, till 15 minutes, everything is uptrend. Let us check in 5 minutes. What is the trend? 5 minutes trend is not important unless you are trading on 1 minute zones. At the time, 5 minutes trend will be used as a ITF. But otherwise, those who are taking on 5 minutes time frames, your ITF trend is 15 minutes. So at present, 5 minutes trend is sideways trend. There was a high liquidity zone was created, but it is pierced. So there is no use with this. At present, there is only one 5 minute supply zone is active, but it is a normal zone. But anyway, let us draw this. This is the only one zone available at this point of time. This is a 24/5, 14:35. 1435. This is the one. Have a rally base drop. This is the only 5 minutes supply zone. Normal zone only. You may ask a question, why we are drawing this? Maybe it is useful for setting up your targets and all. But here we have an immediately available high liquidity zone is available, already tested 4 times, 8 rejections from this zone, very strongly holded the prices. And when it was created? On 23rd, 1450, 3 base candles. One base candle. 23rd, 1440, 3 base candles. 1440. So this is the rally candle, these 3 base candles. This is the way it considered. This is the high liquidity demand zone. This is the demand zone holded the prices several times. This is the 5 minutes high liquidity demand zone. So currently this is the range, prices are moving within this range. This is around 22,928, 23,000. Almost 70 points range is there within this area. Okay, now let us check any other high liquidity demand zones. 8th one, we have a high liquidity demand zone. This is a 23rd, 1155, 5 base candles. Rally 1, 2, 3, 4, 5. The same 15 minutes high liquidity zone is also acting as a 5 minutes high liquidity zone. This is a 5 minutes high liquidity demand zone. So here you can fine tune this zone, 75 minute zone, to check any fine tuned 5 minute zone is available. There is a drop base rally is there, but 15 minutes time frame also you need to check within this area. This went to the 15 minutes time frame. Is there any 15 minute zone is available? Yes. We have a rally, 3 base candles and a rally. Like this you can draw a 15 minute zone. This is the fine tuned. This is the fine tuned 15 minutes zone. Because you already experienced how powerful the fine-tuned zones are. Now within this fine-tuned, are we identifying the here you have rally base rally, but already picked up the orders. So we don't have a fresh fine-tuned zone is available, but here below we have a drop base rally. This is not a fine-tuned zone. This is a normal demand zone. You can't take a trade. If you take a trade, this is going to be an aggressive trade. But aggressive trade should always be supported by price action clues. Without price action clues, you cannot take an aggressive trade. If you take many times, those zones you will be easily violated. So at present you have a zone like this, fine-tuned 5 minute zone. But this zone is already tested. Rally base rally. This is not a great leg out. Okay, you can consider, you can compromise and you consider, but it picked up the orders. And this fine-tuned 5 minute zone is responsible for the creation of this fine-tuned 15 minute zone. That's why there could be some strong order flow will be there, but how strong we don't know. Let me draw, but this, remember, this is not a fresh zone. This is a fine-tuned 5 minutes demand zone. And this fine-tuned 5 minutes demand zone is already tested. It is not a fresh zone. And you can't draw a zone here, drop base rally, as a fine-tuned zone. You can draw as a normal zone. But remember, if prices are entering into this area, this fine-tuned 15 minutes demand zone will be violated. If it is violated, definitely the trend will be changed, either to sideways or downtrend, depending on the earlier trend. Definitely not uptrend when prices are entering into this zone. If that is the case, you cannot plan a bullish trade setup. It doesn't work. These are some important points you should understand. Okay, now Monday's point of view, what we can plan our trade. But before that, look into the other demand zones. The normal demand zones, some of these zones may work very well because some of these zones are fresh zones, some are tested. As long as a bullish trade setup is enabled, you can take a long trades in any of these zones. Whenever bullish trade setup will be disturbed, when there is a immediate 15-minute zone. What is the immediate 15-minute zone? Let us go back and look into the 15 minutes zones. What is the immediately available 15-minute zone? According to this chain, supply-demand zone chain. This is the immediately available 15 minutes demand zone. Oh, it has a lot of strong order flow, 8 times rejections from this zone. This is the 23, 5, 14 hours. 3 base candles. Changing the time frame. This is 14 hours. Yes, this is a zone confluence. This 5 minutes high liquidity demand zone is a part of this 15 minute zone. Actually, this is the 15 minute zone. Let me change the color, make it light color. This is just immediately available 15 minutes demand zone. This is a normal demand zone. Remember, this 15 minutes demand zone is violated. That means what I do to avoid the confusion. Okay. If this 15 minutes demand zone is violated, trend will be changed. That means this 5 minutes high liquidity zone is very, very critical. As long as it holds the prices, 15 minutes zone won't be violated. If this 5 minutes high liquidity demand zone is violated, 15 minutes trend will be changed. Now, bullish trade setups cannot be enabled because the trend is changed to sideways. Your sideways trade setup will be enabled. But it is very dangerous because once a trend is changed, there are higher chances again. See, from sideways again trend will go to uptrend. That possibility is there. But there is a possibility from sideways trend will be changed to downtrend. That possibility is also there. That's why you should be very careful. Let us assume Monday, that is tomorrow, if this zone is holding the prices, then probably you will get a trade opportunity within this area. Info line, okay. So this could be the range, around 134 points. Or maybe this supply zone will be violated and new all-time high will takes place. That possibility is there. If this 15 minutes demand zone is holding on Monday, if it does not hold, then problem will come. Let us assume this is violated. If this is violated, again prices will be coming to the next 5 minutes high liquidity demand zone, that is also 15 minutes high liquidity demand zone, that is also part of 25 minutes high liquidity demand zone. This 25 minutes high liquidity demand zone again having confluence with this 75 minutes high liquidity demand zone. That means this entire area is considered one order flow, a strong order flow. If this is violated, your trend is going to be like this. I mean, your next range is going to be like this. Till the next, until it reaches the all-time high. Now during this time, if this is violated, if suppose this 15 minutes demand zone is violated, short trades also will be enabled. You can go for short trades. At the time, your prices will be reaching somewhere within this area, maybe within this 5 minutes area, it will get support and again push the market up. This is the maximum range I am drawing. You may get support in this 5 minutes high liquidity, because that is also 15 minutes high liquidity. That is again having confluence with 25 minutes high liquidity. The 25 is having confluence with 75 minutes high liquidity. By considering all these factors, maybe this is the area we get good support if this 5 minutes or 15 minutes demand zone is violated. What is the next 15 minutes demand zone? Here we have a rally, 1, 2, 3, 4, 5 candles. Let us check. 23, 5, 13, 15. This is the one, 13, 15. ERC candle. This is a rally candle, these two base candles. If this is also violated, this is a normal 15 minutes demand zone. What is the low of this candle? 22, 8, 118, 22, 8, 180, 80, 18, 50. Okay. So what is this zone? This is a normal 15 minutes demand zone. Why I am drawing? Generally we don't draw 15 minutes demand zone. Our focus is on high liquidity. So I am drawing trend point of view. Suppose if this 15 minutes demand zone is also violated, trend will be changed to downtrend. Now short trades will be enabled. But of course, this 5 minutes high liquidity demand zone, definitely it will give you a minimum one trade it will give. Unless supply is very strong, these zones will be violated. But otherwise, many times 5 minutes high liquidity demand zones will give you at least one good trade. Rare situation they will fail. In a strong bearish trend is happening, at the time they will be violated. But otherwise they will give good trades. So you can take a long trade on this. If this is violated, even in downtrend, still you get a long trade, and the immediately available 5 minute zone, it will again give you a short trade. That way bearish trade setup will be enabled. Sometime prices will be moving like this. So we have one possibility. Tomorrow it will take a support and it will reach this 5 minute supply zone. Even all time high also it will reach. You may see a good rally in the market. That is option number 1. Option number 2, if this 5 minutes high liquidity demand zone is violated, mostly 15 minute zone also will be violated. That way trend will be changed to sideways. In this 15 minutes demand zone, let us check any fine-tuned 5 minute zone is available. Yeah, here you have a drop, 3 base candles rally. This is a fine-tuned 5 minute zone. And again you have one more rally base rally is also there. You have one more LOTL, rally base rally. See, this is a demand zone here. A lot of strong demand is there. So in this area you get a support, and then again prices will be moving within sideways. Prices will be moving in a narrow range. That is second possibility. Third possibility, if this 15 minutes demand zone is also violated, trend will be changed to downtrend. That is a short term intraday trend I am talking about. Because the 15 minutes ITF is for intraday point of view. So at the time prices will get support in this 5 minutes high liquidity demand zone, but still short trades will be enabled during intraday. At the time you can keep the range like this. So this is about our trade plan on Monday. Hope this information will be useful to you. Let us all meet again in our next video. Thank you.